Hi everybody and welcome to this week's top 3 FX picks with myself, Kathleen Brooks, Research Director here at Forex.com for forexspace.com for the week beginning the 22nd of July 2013. Well, it has been an interesting week to say the least. We have certainly on the fundamental front some good news here out of the UK, the royal baby. Interestingly, just about the time that that baby was born, we've seen cable really stall. That's a big week for sterling, not just about the royal birth, but also we have UK GDP on Thursday. The market is expecting a nice figure for the second quarter, 0.6% gain. As you can see here, cable has been doing very well. Now it has run into some resistance, really key resistance. So for those of you who follow the Ichimoku cloud technical analysis, you'll know that the base of the daily cloud is a massive resistance level. Now I like clouds because a lot of people look at them. That comes in just below 154, 153.80. That has been stemming the bulls so far. Now earlier on Tuesday we had some weaker than expected mortgage data, which is actually one of the weakest readings that we've had in a while. Remember, we've had a nice uptick in UK data, which has helped fuel this move. So the risk is actually that we're pricing in this expected Q2 GDP already, and that we kind of buy the rumor, sell the fact. So any move above 154, making way towards that 154.70 level, which is the top of that daily cloud, could be sold into. However, there might be a nice short-term long position if we do actually manage to get above 153.80 towards 154. That could, but we do think the sellers will that 54.75, just below that 155 level. Now the second chart that we're going to be looking at is dollar yen. That's our second pick for this week. Dollar yen had a bit of a torrid start to the week, really. Let's take a quick look at that chart. As you can see, dollar yen has sold off. It's really not been going anywhere fast. It's suffering on the back of some dovish, or the market's perceived dovish testimony from Ben Bernanke last week. Remember, he managed to do a good job. He managed to convince the markets last week in Washington that even if the Fed does start tapering its asset purchase program, that doesn't mean that it's tightening monetary policy, and it will still keep monetary policy very accommodative for the long term. That's investors really breathed a sigh of relief. You've seen good news, good record highs in stocks. We've seen Treasury yield sell off, and we've seen the dollar come off as well. Now that's hit dollar yen hard. Remember, it's very sensitive to changes in US monetary policy, but it has managed to climb back above prior support at 99.40. That is the 50-day moving average, or the pink line in the chart in front of you. So we've managed to hold on there. So that suggests that around about 90, below 99.50 really, good buying interest. Now there's good resistance, 100.70 and then 101.30. So we actually think until we get non-farm payrolls next week, we could be trading the range with buyers coming in as we dip below that kind of 99.50 level, and then sellers coming in above 100 towards 100.80 and then 101.30. Now the last chart I'm going to show you is gold, because gold, even though it's not quite a currency or strictly a currency, it can sometimes trade like a currency alternative, and as the dollar is sold off, we've seen gold really recover. Let's take a quick look at that gold chart. As you can see, very nice recovery over the last couple of weeks. It really extended gains at the start of this week and shot through that 1300 level, which had acted as good resistance, capped gains in the last few weeks. Now we are running into some resistance at 1330. That is the 50-day moving average, or the pink line on that chart. If we get above there, though, it opens the way to 1420, which is the 100-day moving average on the chart. So a deeper correction. So right now we're waiting to see. If we can get above 1330, then we could see some buyers coming in around about that 1340 mark and really getting us towards that, above that 1400 level. However, we still think that the medium-term outlook for gold is still fairly weak on the back of weak performing emerging markets and a strengthening dollar in the longer term. So for us, gold, this is just a correction in gold, and the medium term is still lower, but for now, certainly for this week, gold looks to be in the ascendancy. So good luck trading everybody this week, and I hope to see you again soon. Thank you.